My name is Lindsey. Thank you for joining me today. I'm from Hawkeye Traders. Hawkeye Traders is a volume trading company. So everything that we say and do is really focused and based on volume. So if you have any questions or comments, make sure you leave them in the GoToWebinar control panel there. But until then, I'm going to be talking today about market direction using volume and price. If you understand volume and you understand price, then you have an edge on the competition. And what I want to show you today is a unique tool that we use to help us to have that edge and to be able to see ahead of time what the market's going to be doing, what the institutional traders are going to be doing, putting their money on, what a lot of people like to call smart money, and where the direction of the market will be biased using these unique tools. All right, as we get going, we want to make sure you understand that trading in these markets, futures, forex stock, or options, equities, or cryptocurrencies has a great potential for reward, but they also have a large potential for risk. Make sure you understand the risk in order to trade in these markets. Anything I present today, it really is for educational purposes only. I'm not a registered trading advisor, so make sure that you understand that there is past performance is not necessarily indicative of any future results. Today I'm going to be going over an introduction to volume. A lot of people understand volume. They think they know what volume is. They look at volume. They don't know what to do with volume. Most of the time they don't even use volume. But I want to show you why volume is so important. I'm going to give you some background on what volume is about, some background in my own personal trading, how I came to know about volume. I want to show you what the opening price principle and what volume price analysis is all about. And I'll give you some live market examples of how volume is so important on understanding and seeing the directional intent of the markets. I will present a very special offer at the end of this presentation. And of course, I'll leave everything open to Q&A as we proceed. So in traditional trading, between 70 to 80% of traders are failing. A lot of people will say, well, 90% of people are failing because only 10% of the traders out there really are making any real money. Well, that could be true. I think the majority of the people that are trading are failing because they fail to use the proper time frames. They're trading in off time frames, so there's always trading from the same time frame and always expecting different results. Even as the market is moving and changing and expanding, volume is increasing and decreasing, volatility is going up and down. But most traders also are using traditional trading strategies. They're using the MACDs, the moving averages, stochastics, Bollinger Bands, Elliott waves. I'm not saying anything bad against these. I'm just saying that if the majority of traders are using these indicators and the majority of traders are failing, there's got to be some sort of correlation there. Okay, that's all I'm saying. So I want to say, why is volume so important? Well, volume really is the only leading indicator. All the other indicators I mentioned previously, they're lagging indicators. They show you what the market has done, and then you can just guess at what the market's going to be doing from those. But volume really is a leading indicator because it shows you what the banks, what the institutions are doing right now, what the market is doing. And you see related to price exactly how that impulse will respond to it. So it signals market intent. It signals price movement before it happens. All the other indicators, by comparison, are lagging. So volume is the key, and I will show you a little bit later on that volume on triple time frames is the edge. Okay, so for me, back in the late 90s, I was trading up a storm. Anything you bought in the tech market was golden. You could go out and buy basically anything, Qualcomm, Microsoft, any of the stocks that were going on out there were just buy and hold, and you made money on. I made a lot of money. I got so excited. I bought a house. I paid off all of my debt, paid off all my cars, set aside college funds for my kids. Everything that I did was just golden until the bubble burst. 2000 came rolling along, and then I saw 50% of my entire portfolio go down into the toilet. I blew up several other trading accounts trying to recover from that. even going off into Forex for the first time and going deep into options, and I was just really trying to get out of that hole. I just couldn't do it. Then I started following every Tom, Dick, and Harry out there, and I really lost all of my confidence. The confidence, the veracity I had in trading back in the 90s just completely melted. In 2000, I was just a shell of a man. You know, I was very inconsistent in my trading. I lacked confidence. I tried to pull the trade. I couldn't push the button on a trade because I thought, oh, okay, I'm going to lose now. I was shocked. I really was. But then I learned to learn from my mistakes. I learned some valuable lessons along the way. I saw and started to learn the mistakes that I made and started to see that I really wasn't trading the markets. I really needed to start trading risk, and I needed to start understanding what risk was. So it was at that point, about 2005, that I was introduced to a company called Hawkeye Traders. So like yourself, I came to a webinar. I was listening to an engaging speaker named Nigel Hawks tell me about volume and about the interaction of volume with price. And so I found out the key between trading volume and price, and I learned all those secrets. And I learned that the missing link that I had really was volume. That I ignored it. I didn't use it. But when I started to study it and to understand it, and when I was introduced to Wyckoff and the principles of volume spread analysis and volume price trading, I really saw that that was the key to what I was looking for. So the opening price principle is kind of what opened my eyes to understanding the relationship. So I want to introduce that to you here. Standard volume spread analysis, or VSA, we like to refer to that, does not consider the open, okay? It just looks at the overall distribution of volume over a price bar or a time frame. So you're looking at that relative distribution. So Hawkeye, however, considers this price as paramount. It's very similar to an auction. Okay, if you go to an auction and the price opens up at $100, no one gets a bid. No one asks for it. So it goes to 90 to 80 to 70 to 60. Finally, you get a bid at $50, and the markets open up, and you start trading at $60 to $50, 54, $60, $65. You might end up about 67.50. So the opening price sets the stage. If the market opens up at 100 and you instantly get a bid at 100, and then the market trades up to 100, it could even go as high as 120, 130, $150 before the session ends. And so the auction price, the opening price, really affects where that market is going to head. And it's really important for you as a trader to understand that and to make sure that you set that in, because it sets the basis for the entire session. Volume price analysis then takes that volume spread analysis. You're looking at the overall distribution of that volume over the price bar, and you take into account the opening price, the high, the low, which is the range, and the close of that price. These are all key components that you have to do. So volume price analysis looks at that distribution relative to the high, open, high, low, and close to define whether we see buying pressure, selling pressure, or a neutral, no demand possible setup. So volume takes into account that and compares it to the range of the bar so you can understand that. So you can see right here, as we see the distribution is down, majority, point of control, value area, everything is down in the lower part of that price bar. You can also see that the close less than the open is in the lower part of that price bar where the majority of the volume occurred. We are very confident there is selling pressure, and so we paint the volume bar red. Okay. So what we've done is we've taken over 20 years of research, but we came up with a very sophisticated indicator, one which identifies sellers with simple color codes. Volume pressure is identified with red as selling, green to identify buying pressure, and white to identify a neutral or a very even distribution. So if you see this type of a distribution, which is very even, where you have the open and the close very close to one another, there's really no demand that's placed upon that market. So it becomes a much more sophisticated way of trading, more forensic analysis than it is technical analysis, because you're really going into the nitty-gritty and the details of the volume. But you don't really have to worry about that. All you have to do as a trader is to identify the volume itself and to see whether the pressure is buying or selling. So it helps you to be able to see the trades more clearly. It helps you to perceive the charts, the structure of the market more clearly. It shows you how to place your trades because you see where buying pressure or selling pressure is occurring, and it does so ahead of time. It shows you how to keep the profits that you make because you see when the market is transitioning or starting to reverse. And it also helps you to protect your positions, okay? So here, let me give you a few quick examples, and then we'll go right into some live trading examples. You can see that during any market open, here's the opening of the S&P market. This is the S&P on a 5-minute chart. You can see that there's a large amount of activity, a big amount of push down. You can see there's a large amount of selling pressure coming into this overnight. So as the market closed and coming up into this, you can see there was some buying coming into that, but then it very quickly sold off as the market came in. So this opening price went right into a nose dive, and we saw 2 price bars of red volume, okay? So that opening price gave us some key information that we need to see, that there was a lot of downward pressure into this market. So the market looks like it's seeding itself into a potentially down market, but this doesn't tell the whole picture, okay? There are other things that go on. 1 and 2 big bars followed by an extremely large neutral bar tells you that the downward pressure has a limit. And it said this is my limit right here, because the sellers couldn't come in with enough veracity to drive it below this point. So the limit came in. The point of control for that volume day occurred right at that point. And so that said, here are the breaks. You've got to come with much more conviction if you're going to take it past this point. Okay, so volume's sitting here talking to you and telling you this information. That's also followed by 3 or 4 more no demand volume bars that are telling you that this activity is not going to be continuing down anytime soon. So the price then starts to trail back up again. The second thing to look at is this is a 5-minute bar, so we're looking at 5, 10, 15 minutes. Pull all 3 of these together, you have one 15-minute price bar. We identify a 15-minute price bar range as a wide bar. Wide bars are painted purple like you see here on the screen. And a wide bar, 80% of the time, the price will always trade back up into the body of the wide bar. It's just statistics. And so you can see exactly this 15-minute range right here, price pulled right back up and is trading predominantly in the middle of that wide bar, okay? So that's what I want to point to. Second thing I want to point out to you here is this little guy. Right, this little guy is what I refer to as a price extension with opposing volume. Price extension means is that it comes up and starts to create new highs for the day. But what happens is it tries to trigger a lot of retail novice pseudo-professional traders into thinking this is a breakout, and they're starting to get long in the market, only to find out they were getting long at the high of the day. The price sucks back really quickly and closes down below the open. They're trapped into the trade now. They don't want to take a loss, but they're hoping that the momentum coming into this trade is going to continue to push them up. But when we see that price is starting to hit new highs, and we see that that price is red and that the volume is greater than the trailing average volume coming into that, Hawkeye understands and knows that this is a key reversal point, a point where it is a failed price action and we don't expect price to continue in that direction. So we expect price to continue in this direction. Once the second bar closes, showing there's actually no demand for price to go up, then the pivot paints, the little yellow dot on the top of that price, that's a isolated high, a true isolated high that teaches you as a trader to know you're expecting price to continue down at least 3 to 5 price bars. So we are looking at this volume and price acting together to say, this is the top of the market. We see selling. This is really attractive to sellers. And the institutions are stepping in at this point, trying to trap retail buyers into a fake breakout and then pushing the price back down very quickly. Then we start to see price starting to trend down. We see distribution occurring. It's very characteristic when you see red, white, green, white, red, white, green. That is a distribution event that's starting to occur. Then we see a color change where now we see a steady stream of selling volume coming in. And as that volume starts to decrease, we start to see the volume increase. So the selling price decreasing with increasing volume is a strength move. Okay, so you're starting to see price responsive to the volume that's coming into the market. These are basic fundamental volume analysis tools and information I'm giving you here, but it is key to understanding the direction of price and making sure that you're always going to trade in the right direction. Okay. Once you see and understand the relationship here, then you can start to see when volume break out that you're going to have the confidence to pull the trigger and make sure that you're in the trade and you're going to stick with that trade. So as you see the wide range getting down to the floor of that, and you start to see a steady stream of volume coming in, which is building, you see that buying is neutral, is muted, is in no demand. That just tells you right there that this is a failure, this is responsive, this is responsive. And then when price starts to break below your floor of support, that gives you the trigger and the confidence to take that trade and to stick with it. And then boom, you can see you're off to the races and you can see volume is supporting that move. Okay, so that in a nutshell is what we're trying to teach you and to help you to see. And that's what our indicators show us ahead of time in these markets. And now let's go in to see some live examples to see exactly what I'm talking about in a bunch of different markets. So here I've got on the screen our volume tool, which is the Hawkeye volume. It's showing the red, green, and white volume. Here it is, the volume paint bar. It's painting the same volume, but it's coloring the price bars the same color as the volume. You will see I've got some small dots here on the bottom. These are volume radar dots. They just show you ultra low volume. Ultra low is really important to know and to see because when volume dries up, that's really important. You can see very high volume shown by a yellow dot and ultra high volume, which is shown by the red dot. Ultra high and ultra low volume are probably two of the most important ones you want to see, and we point them out to you. And of course, I've got my pivots and the wide bars showing here on the screen to show you the high probability reversal and 3 to 5 bar reversal pattern shown there, okay? So what we are looking for is understanding directional intent. So when we see the market open, like we saw earlier today, this is today's live market right now, 3 minutes chart. You're seeing the opening of price range. You can see the price initially came in, opened up, down with very large volume. Okay, so it's showing that there was a large amount of pent-up frustration from the sellers, and they came in selling hard. Question: was this a true market direction, or was this a market move to try to get prices as low as possible before the institutions came right back in again? Okay, that's a good question. So prices come right back down. What's it followed by? Neutral price bar. Okay, so you see very heavy selling followed by a neutral price bar. That does not tell me price is going to continue to go down. Number two, we got another big red volume bar, not quite as big as the previous one, but then it closes back up. And notice that price bar. It's kind of a neat looking price bar. It's the price closes in the very middle of that price bar. And it just happens to be a pivot, an isolated low, a true isolated low. So that price bar itself, even though it's colored red, is still showing us that there's not a lot of pressure pushing this market down. Following that price bar, we can see a wide bar pushing back up very quickly with buyers, and it's very responsive. So you can see it doesn't take many buyers coming into this market to get a very wide range price bar. This wide bar is twice the average true range coming in. So after we've seen these opening bars, a twice average true range bar coming in with buying is responsive. Okay, So that puts us right back up into the opening range. So we basically have opened into this market. Once we see this opening range, then we start to see buyers coming into this market. Buyers started coming in right here with second highest volume of the day. And we start to see volume push up. We see sellers attempting to come back in again, but that selling with very large volume, I might add, was non-responsive. No responsive selling. So this set the plateau, okay? This set the plateau. Then we start to see a nice stream of buying coming in. Here's a price action failure, no volume to support it. It's not going to go down. But when buyers started to come back in, you saw increasing volume and responsive price. This became our entry point. And so when you see a break of our landing zone and an entry point supported by a steady stream of buying volume, you've got a great place, a high probability, low risk way to enter into that trade. Okay. Second and third time frame then becomes even that much more important. As you look into the second time frame, I like to use harmonics. Harmonic time frames are very important to see because you're using time frames which are multiples of each other. So a 3-minute, a 6-minute, and 12-minute is just one example. You can use a 5, 10, 15, a 5, 15, 30. You can even use a 15, 30, 60. Time frames are important, but as far as you're concerned, I just want you to understand the principle of a harmonic time frame. So looking at a 6-minute time frame, when I see the opening and I can see the steady stream of volume starting to come in, and I see a 12-minute time frame giving me the same type of analysis, I'm looking at that same break on 3 time frames, then I can see a nice steady stream of 6-minute and even a input of 12-minute volume that helps me to know that my 3-minute charts aren't telling me a lie. They're giving me really valid, good information. So understanding this trend, longer term trend with my shorter term trading chart helps me to stay alive. All right, that's a short time frame futures example. Let's go over into Forex, because a lot of people say there's no volume in Forex, so how can you use volume analysis on a Forex market? And that's true. There is no centralized volume exchange in the Forex market, but we do have access to tick data. And when you approximate volume based upon tick data, you get about 80% accuracy, and you can still do the same type of analysis and volume price analysis on, that's right, the Wyckoff method using ticks data as you can on true volume. So when you're looking at this this morning's action on the open of the US market, you can see prior to that open, see that little guy right there? Price is pushing up and showing you that the market does not want to go up, but it does want to go down. And as the market started to push up, sellers jumped right in, okay? And responsive price. Look at the build of selling coming up into that. Then we go into a nice sideways move, but then it came to a certain point to where it said the brakes are on. This is enough. We have a volume price extension with the opposing volume, just like we had up here, but now it's to the upside. And this is telling you this market doesn't have enough strength to continue to go down. Here is the second try. Market came to a certain point and became very, very attractive. So just like any supply and demand scenario, price goes to extremes, it trades down into fair value, it goes down to extremes, trades up into fair value, and then it starts to trade back up again. So it cycles through these things, and volume is here to tell you the direction it's going to go. You got to see that. And the tool helps you to understand that. When you have a pivot painted on top of that, it's just icing on the cake. When you see a nice price bar extension like that, that tells you that. Now, these aren't instant. They do give you, in this case, this is a 5-minute bar, so that's giving you 5, 10, 15, 20, 40, 6. That's 1 hour. Here's an hour and a half and almost 2 hours before you actually get a real tradable entry. But that's great, because that's an hour and a half that you're not making dumb, stupid trades. That's an hour and a half of analysis where you're setting up and then you back up the truck, baby, because you know that you're going to go to the bank today. Kind of a trade. Okay. So when volume, a steady stream of volume starts to support that, when you see that your second time frame also is giving you buying volume, when you see that that reversal signal is also present in that second time frame, when your third time frame starts to show you alignment of that same time frame, then it gives you the same confidence to take that trade and to take the trade with size. Okay, so properly weighted and properly sized trades are really key and important to long-term building of wealth. You need to be able to understand that if you're going to trade these. And volume is the key. Now, you can't just trade volume looking at this chart and just only trade volume. Because well, where do you get in? Because volume's always changing color. It's always going red, it's always going green. If you get in, out, whatever, you can be in and out. So a lot of times people will put on other types of tools to do that. They'll use their Bollinger Bands or their moving averages or their trend lines, the MACDs, to help them to make a trade decision. But if that trade decision is backed up by volume analysis, you're going to take that trade with a lot more confidence. Your system now, which was maybe a partially win, partially lose, maybe a break-even system, now becomes a consistently profitable one because you're using consistent analysis supported by the only leading indicator, which is volume. These are all short time, but let's look at some longer term time frames. This is the NASDAQ market on a daily, weekly, and a monthly chart. Very shortly, I'll go through and give you a short offer, but I'll go into a Q&A and have some markets that you want me to analyze for you, and I'll be more than glad to go through any Forex, futures, cryptocurrency market that you want me to look at and analyze, and I'll be glad to go through that with you. But looking at the NASDAQ market coming up into the recent, you can see that the weekly trend right here, which is my friend, I love the weekly charts. I would not trade without a weekly chart, and I'm a position trader, so the weekly chart is the best chart. But when you start to see volume coming in and saying, the brakes are being put on, this right here, okay? This came in and said, okay? Then that helps you to position yourself as a trader. All right. Shorter time frame though, as this does come in, shorter time frame daily chart shows you that as that break was being applied and the market traded back down, one day stood out like a sore thumb. And that was a huge, very high volume day, showing that the price was very attractive to buyers in this market. And the resulting price action from that went from a 154 all the way to a 160. So you got $20 response out of this 1 day price range. Okay, price got to a point where we consider it to be overbought. The price got out of a normal fair value range and got extended. Price opened up and tried to trade higher. It just became attractive to sellers at that point. So profit started to come back in, and it traded down very quickly, gapped down, continued to be weak. There was no buyers to be seen here. The buyers that were swamped by sellers because the white identifies equal distribution. Okay, sellers, an attempt to buy was very quickly thwarted. And then here you start to see buyers starting to come back in again. But this buy pattern is racing up, and you're starting to see a nice breakout here. But that breakout is looking like it's coming on a declining trend of volume. So this might be short-lived, might or might not. It's still a nice steady trend of volume, and you can have very low volume in an uptrend, and it can continue for a very long time. But this is still a declining trend of volume in an inclining price direction. We need to be able to see this price start to increase. And if we start to see a large price bar, especially a gap like this on low volume, that's a very big question mark for me to determine if is this sustainable or not. Okay, so I've shown you slow, medium, and longer time frames. Netflix, okay. Netflix is very, very popular these days. Hawkeye has identified this as an entry couple of right back in 2016, so been holding long on that since then, but there's no reason to have gotten out because volume really has helped us to see that. So when you see these types of plateaus, you understand where volume is leading you. Then when you start to see the price break and you see volume supporting it with heavy pressure on the buy side, heavy pressure on the buy side, then that helps you to take those trades with confidence. These gaps and pullbacks just only check to make sure that that is positive, but when you see these price extensions with opposing volume, that's almost a sure sign that the market's going to continue in your favor. Okay, you see an extension up here with opposing volume, a really nice volume coming in here, but selling pressure. Look what happens. Price starts to trail back and profits starting to come back in. But when that bottom is hit and volume turns itself around, then we start to see just the opposite occur. So volume is the key, and it helps you to understand the structure of the market. It helps you to know where to place your trades. It helps you to identify direction and reversal points. Volume is the key. And understanding this volume relative to multiple time frames then gives you that much more confidence. All right, so let me go and get back to my presentation now. Let me pull that back up. Okay, so I want to go and give you a special offer here. Today's offer, I want to give you access to the Hawkeye Volume Starter Package. It is the 5 indicators that I have been showing you, all right, for the past half hour. I want to give you 1 full year access into our membership area, all 5 of the indicators. I want to give you access to our Wednesday training rooms, to our Thursday members only focused mentorship training, and I want to give you access to our Hawkeye Skype chat room, which is our inner circle. I also want to throw in a special 2-hour on-demand video training course, which teaches you how to use this new volume indicator with all of your existing tools like moving averages, Bollinger Bands, and so forth, standard lagging indicators. I show you how to use your Hawkeye volume pack with those tools. We normally sell that for $397 in our store. If you go to our store right now, that's what you can buy it for. But for today, because you're part of this, I want to make it available to you for $97. $97. The link is hawkeyetraders.com/starter. I will post that into the chat room right now. There it is. If you click on that, hawkeyetraders.com/starter, it will take you to a page that will enable you to purchase that for $97, which is a full $300 off of the normal price that we sell it for every single day. Or if you're interested in subscriptions, then you can get that for $17 a month. So, but most people are interested in the longer term purchase because they don't want to be locked into a longer term subscription price. This is no subscription, it is a lifetime license. And if you want to upgrade to any of the other tools, we give you full value of the purchase price right here, not what you paid for. So you lock in this discount on all of your upgrades as well. Okay, so what that includes, it includes the Hawkeye Volume tool, the Hawkeye Volume Radar, Hawkeye Volume Paint Bar, Hawkeye Pivots, and the Hawkeye Wide Bar. All 5 of the indicators that I've been showing you on the screen. I'll go back through and show you that real quick. Here, this is on a MetaTrader 4 platform. Let me go and show you the Hawkeye Volume tools. Okay, so you can see Hawkeye Volume Paint Bar here on the price. This is Hawkeye Volume Paint Bar. This is Hawkeye Volume Radar. The pivot are the yellow dots, and the wide bar, the purple bars that show you the probability of price pulling back into the body of that wide bar. Our tools do not work directly on Thinkorswim, but you'd have to use NinjaTrader as a proxy to use your Thinkorswim data on NinjaTrader, and then you can use the tools on NinjaTrader, but not directly on Thinkorswim, sorry. The platforms that supports are TradeStation, MetaTrader 4, NinjaTrader, and TradingView. Yes, the TradingView platform is the one that we use for primarily the cryptocurrencies and Forex, but you can see that the volume in crypto is still as accurate and usable as volume in Forex or any of the other markets, because when you see volume trends, and here you can see the Hawkeye trend tool showing you that trend is well intact. When you get to the bottom, when you start to see large swells of volume coming in, but that is opposing volume, just like what I was showing you earlier. See, this push right down here was still selling pressure. So you just saw a profit taking coming back in, but you could see that when we got to this bottom right here, there was a very large amount of buying coming in. So this became very attractive at this point. You got a nice series of accumulation, distribution, accumulation going on right through this period. And then when you started to see a steady stream of buying volume coming in, showing that buyers were interested at this price, Hawkeye signals that this is the time to start getting in to get long in these markets. So that's just the Ethereum, but you can see that there are quite a few other markets that come in there. The Fat Boy tool shows you the strongest and the weakest of the tools and which ones that you should be looking at and trading. And we're trying to identify those longer term. Forex identifies the exact same. So on the TradingView platform, you can see Forex highs, Forex lows, and so identifies the direction or intent of the market and how you're to understand and to trade those. Okay. So if you have other markets that you want me to analyze for you, I'll be more than glad to do that. Stocks and ETFs, absolutely. Here I'm showing you right now, there's Netflix is set up right here. I've got one intraday. We're looking at today's trade on BABA was out of this world. Okay, so you're still looking at about $4 to $5 move. Intraday identified right at the open. You got identified with trend, volume, momentum. Everything was in your favor. Multiple time frames. Just all lined up as the perfect trade in the perfect direction. Couldn't ask for a better trade. Tesla. All right. Tesla. Today's action on Tesla, we saw a big opening. Okay, came right back up, and then right as the price validates the trade back in, 5 minute gave us a trend entrance, a nice pullback. Okay, the 15 and the 30 minute only showed volume supporting that. So you got a trade entry point here off of the 5 minute with 15 minute confirmation. The 15 minute trend, however, just stayed neutral. Okay, the overall longer term trend still is weak. So the gains that we had seen in previous weeks have still flattened out, and we're starting to see there's a lot of downward pressure coming into this right now. Going forward, Spider, let me look at long term first because I prefer to look at the longer term. So let me pull Spider up. Obviously, you can see Spider's gone into a sideways. We've gone into a downtrend on the weekly. We've gone into congestion on the monthly, downtrend into congestion on the weekly. We are in a downtrend and in congestion on the daily as well. But right now, this downtrend looks like it could possibly be breaking out. We have a trend of volume, but like I said earlier, that volume is we've got rising price with declining volume. I need to see volume step up to the plate and give me something with confidence in order to push that up. We're not coming off of any reversal signal, so this could just be a simple reversal trying to get as high as we can go. We're failing to hit new highs, and so we are in a channel, a market structure where we are starting to see price turn around like that. So that's what we're looking at for that. So right now we are sideways still. We are in a trading range. Trading intraday, long and short, the near-term intraday traders are trading long and they're being rewarded for it, but that's only because of a volume trend. The overall longer-term trends are still saying that this is a start of a downward market. Okay, let me post that buy offer again there in the chat box there in case you're interested. Stocks and ETFs, no problem whatsoever. GDX, gold bugs. All right, so you can see that they're in a really nice bullish trend right now on the daily. Okay, it's congested on the monthly and the weekly, but it is a congested long side. Okay, but we're still looking along. The juniors are the same way. And for you options traders, this is a key. when you see the volume price extension bars come in like that, those are awesome places to sell puts. Okay, these are awesome places to structure and to sell puts in the trade. So if you're looking at trading these and taking these, they're low risk, high probability entry points that you can take advantage of, and volume will be behind you all of the way. Okay, crude oil, absolutely. I am a crude oil trader. I love trading the crude oil. We are in an uptrend right now, expanding, showing a lot of good direction on the daily. If we go into the intraday, then you can also see a lot of good trading from that. But the weekly is in a really nice bull trend as well. The monthly has not quite broken. Right now, the monthly is still in a neutral trend. It's coming right up to our stop level, which is high probability break, but this is high resistance level. We get a break through this, all right, then we're looking for price to get us right back up into the 80s, even possibly back up to 100 again, based upon that break. But that break looks like it's got a lot of volume supporting it coming into here. So we got really good signals coming into that, both on the weekly and the monthly, and the daily is showing us that we are continuing to take these directional trades with gusto. So the downside moves don't signals we don't have to take because they weren't valid on multiple time frames, but all of the long side signals were, and so we've been taking those and holding them for now. Looking shorter time frame, then you can see that we can trade these on tick charts, rank all bars, and so forth as well. Intraday trading, we can look at trading these charts and finding out, are these trades tradable intraday? You can see that the market intraday has not been very fruitful in the crude oil market, but gold has been quite fruitful. The S&P 500 as well. This is a buy and hold day, just like most, but you look at the opening of the price, gapped up, price failure to go down, red bar, no demand, then followed by a very responsive buying bar. Once the 15-minute time frame came out and break, you're in and up for the day. NASDAQ is exact same picture. If you were to look at the NASDAQ, okay. Again, at the NASDAQ at the open of the market, the stabilization period, the break of your 15-minute range gives a nice buy signal right there, followed with volume support, and then just a nice trailing signal to buy and hold and to get out at the end of the day. So those are great days to trade, and it helps you to see that and to understand it. So with the help of volume, it helps you to see those entry points. It helps you to take the trade with confidence, and it helps you to be much more confident trader. Bitcoin, you want to see Bitcoin? Okay, let me get TradingView back over here real quick. Here we go. Here's the Bitcoin chart. Right now, this is a 240. Looking at Bitcoin from Coinbase data. You can see that we're coming back into stabilization, but right now we are in a congested uptrend based upon the 240. Okay, if we go back out to a 1 day, then you can see that from the highs we've come right back down into a stabilized range where the lows were back into prior, prior years ranges before the big run up in December. But this looks like a real healthy floor. The bottoms weren't taken out. You can see that we have multiple hits in this same area, and now you're starting to see price come right back out of that. So we still have a downtrend that needs to be broken, but right now you're starting to see the volume pushing that trend into an uptrend. We've seen that once or twice before, but it created a double top and failed. Now we have a double bottom with a very small channel. Let's see if this can be supported. The volume coming from that right there, you can see that the volume has had a nice start, but we need to see if it has legs. Prior to that, we can see there are very good signals of volume coming in, that this becomes attractive at certain points, but we did not see it come in at the new lows. So that tells me there might still be some downside in Bitcoin from this, especially if this fails. I really liked this. It gave me a lot of trading opportunities in the intraday. So by looking at this action, I was able to go into the 15-minute or 5-minute charts and trade that. Okay, a few more. I've got about 2 minutes left. Do you have a scanner? Absolutely. And depending upon the platform that you use, MetaTrader 4 has one, TradeStation has a scanner. You can see that these are setups. It's in TradeStation's radar screen. There's a scanner that's also built up here as well, that if you wanted to pull one up, then there's a scanner setup that uses our tools to go through and scan for the potential setups that you're looking at. So we can scan specifically for a specific roadkill setup or a volume setup or a new trend and so forth, and be able to trade based upon those. It creates you a radar screen list that you can just click on and see a trade, and then once you click on it, it just automatically pulls it up to your screen, and then you've got that there. NinjaTrader has a market analyzer as well, but no scanner. And MT4 Professional has the scanner built into it using the Hawkeye function. Okay. Boy, there's so many questions that flew by. It's difficult to be able to see that. But yes, Jay, Forex, Bitcoin, you can take advantage of any of those markets using the Hawkeye tools. They are not market specific. Any other last minute questions? All right, I think that exhausts all the questions, and thank you very much for your time and attention. If you need to have any other questions or comments, then you can always contact me at, let me get that for you here, team1@hawkeyetraders.com, or go to our website for more information, www.hawkeyetraders.com.